Hey guys, I will be going over my trade I took today, going short to previous daily low. Going to be going over why I took the trade, the loss, and just gonna get right to it. Um, I took shorts on my personal account today, and I took a $251 loss. So almost like a $300 loss today on the personal. But I went short today to target previous daily low. And I'll be going over why I took that short. So if I can pull up my charts. This short really caught my attention this morning. I didn't journal or create a game plan like I normally do. I immediately went short as I saw this, but it really caught my eye. So here we're in the daily time frame, and you can see how this candle opened. Or let me go back to the replay so it looks more accurate. Okay. So this morning I saw our candle open, then trading up here. These lows down here, so the sell side liquidity level and previous daily low, they're very good targets for me to look for, because if the market is trading off a POI or a key level, this is where I would target. So that way we have the internal to external setup. So sell side and previous daily low, those were my draws. So I was bearish for today. Going into our 4-hour time frame, we had a 4-hour SIBI. So this PD array, we traded into it, and we had S&Ts with ES. I'll show it on the hourly time frame because here it doesn't really look that good. So what I was expecting from this area is to jab into here and then continue pushing down, taking out the sell side liquidity and previous daily low. So this sell side liquidity was actually previous weekly low. No, I'm wrong. Yeah, it wasn't previous weekly low. It was actually Friday's low. But going forward, I was looking for this internal to external move from this 4-hour SIBI to these lows. And I needed SMT to confirm this setup. So on the hourly, you can see that once I compare ES with NQ, ES did not take this candle right here, while NQ did. NQ took this candle, ES didn't. We had SMT. There we go. And that's what I wanted to look for as confirmation to trade from this 4-hour SIBI to these lows. We were also above the manipulation level from the stat level right here. This daily manipulation stat level from this indicator. That was, again, a higher confluence. So what do I want to see from this 4-hour key level? So from this 4-hour key level, I want to see a 15-minute inversion or a 15-minute change in state delivery. Here we had this 15 inversion with displacement showing strength. So we had this displacement here closing below this PD array. Now we're going to invert it. You can see how this candle taps right into the consequent enroachment of this inversion, and we keep closing below this PD array. That gave me a lot of confluence, a lot of confidence that this was going to melt right through. So So I anticipated this 15-minute inversion to hold price and this 15-minute fair value gap above to become a breakaway gap. So on the 5-minute time frame, if I knew that my draw was lower and I knew that I had all my criteria met in order to trade, now all I have to do is find my entry model. So here we had a 5-minute fair value gap right below that inversion. Again, I was anticipating this 15-minute gap to be left as a breakaway for price not to retrace back to it, but then to continue going lower. So yeah, you can see the higher time frame PDL, the 4-hour. Then we had that sweep. We also had S&Ts at the highs, as you can see here. This high did not manage to be taken by ES, but NQ did. This was our 5-minute SIBI. So from this 5-minute SIBI, I would like to see a 1-minute inversion. So on the 1-minute time frame, we had this VPR. So you see how we had this change state delivery, and we had this 1-minute fair value gap right in there. This would be your unicorn setup, and this is where I went short. It was 8:49 a.m. at that time, and it looked very good to short. So I did not journal. I did not create a market game plan. I just clicked the sell button because every criteria was met. So as every criteria was met, all I have to do is execute. So I went short, and I went short initially with 3 contracts. Then I went another short with 2 contracts at this other SIBI. And remember, my drawn liquidity was these lows. These lows were my drawn liquidity. But as you can see, once we tap the 0.5 discount of this dealing range from this high to this low, we then started seeing the reaction back from discount back up to premium. So from this area, I do not want to add anymore because I never want to add when price is at discount, nor do I want to add when price. So when I'm shorting, I'm only adding as price is at premium, right? When price is at discount, I no longer want to pyramid in to my short. The same thing as the other way around. If I'm on a long position, I never want a long at discount, or I never want a pyramid at premium. I always want a pyramid at discount as I'm going long. So you can see price then retraces back up. This is where I get confused because there's only 2 scenarios. Either price goes for that 15-minute gap above right here that I anticipated to be a breakaway gap and then continue going lower, or I'm completely wrong on the draw today. So as I had all my criteria met and I executed, all I did was wait for it to either hit my TP or my stop loss. And today, the market proved me wrong. So I got stopped out on that trade because my stop loss was around above the 15-minute inversion or somewhere in the middle. So I got stopped out on that trade, and the market showed me that I was wrong. So I'm going to pull up the executions. You can see I got in 3 contracts here, and I'm trading the M and Q. I'm not trading the full NQ contract. I got in another 2 M and Q, and then I got in again at 1 M and Q at this 1-minute SIBI. Here you can see I got stopped out my full 6 M and Q position, and I took that small loss. So yeah, this shows you that anything can happen in the market, right? This goes to our fundamental truth, lesson 1. Anything can happen. The whole setup can be there. All your criteria can be met. But the market can do whatever it wants, and it will show you that you're wrong, even if everything looks perfect. So have no expectations, because expectations cause emotions. So if you want to trade fluidly with no emotions or limiting the emotions, do not have expectations. And whatever you are putting on the trade, that is what you are spending. It's no longer yours, it's the market's. This is the thought process I had this morning and why I took the loss. But in my opinion, I would take this trade 1,000 times. It's all about repetition, refining, and doing the same thing every single day. So this is all quick little recap and the loss I took. I journaled this on TradeZella, my trading platform. And yeah, I journaled everything I saw. And what I was looking at, and everything was met. All the criteria were met. All I did was execute, and I took a loss, and that's part of trading. All I gotta do is just let the probabilities play out. So that's all. Hope you guys have a good day. Thank you for listening, and I hope you guys got something out of this.